Good morning and welcome to an edition of Roadhouse Last Call. We are live. Today is June 6th, Bender. June 6th, 2023. How are you, sir?
I'm good. Thank you. How are
Bender
you?
is good. I'm doing all right, man. Just kind of sorting through some things on some of these charts, looking at different things on some of these charts, sorting through some of this uneventful news for the most part. Yeah, another day. Another day, man. Just another
Well, how about the
day.
are you going to talk about the SEC Binance stuff? You
Am
got
I
that on
going
your
to
list?
talk about it? Other than it being a little bit murky, in my opinion. Look, it's like their SEC is going after them for basically skirting and avoiding regulation, right?
Yep.
So what that means, I'm not really sure, man. It's like when
I
you
love
look at
the
it,
quote that they posted from the chief compliance officer that said, "We are operating as a fucking unlicensed securities exchange in the USA, bro."
which
I chuckled at that.
right, it's like almost as good as the quote from the Russian general or Russian whatever yesterday, as far as him saying that I have animosities towards this individual as far as arresting some guy. It's just it's really funny how it's like we're just going to say what it is without really saying what it is, and then now what are you going to do?
Oh.
Definitely a new world out there. But I like that quote. The quote you just gave is obviously one of those things. But it's like, don't you have to have regulation actually in place in order to enforce regulation?
You would think, yeah, that would be one of those. It's like, well, we didn't
Right.
tell you about.
Yeah, no, it's like that. So in some ways, it seems like that because everybody's saying it needs regulation, needs regulation. Okay, we're going to sue you for skirting regulation, but is a regulation? Well, don't go getting too deep into the facts on any of this. I look, it's like I think like many lawsuits, this is just meant to bring people to the table to get something done. Um, we'll see, we'll see. I don't know what to think of it. I don't think anybody does. I think when I see government moves like this, it all goes back to, hey, there's a lot of money out there that we don't have our hands on and control over. We
That's
need to go,
exactly, yeah.
we need to go ahead and by hook or crook, we're going to get this thing done. So that's what it speaks to me more than anything else, as far as just like, hey, we're not getting what we need out of this deal. So we're going to go ahead and use the law or our version of the law to go ahead and get it done. So I don't know. I don't have a stake in any of it. I do own some Bitcoin, but not enough to where it's going to be like, okay, I care either way. So
Yeah.
it's like, what do you do? I know that this dip, if you believe that Bitcoin is and crypto is a longer term asset to hold, um, it's like this is going to be a buying opportunity. Now, how low will she go? That's a different subject, because when you start talking about regulation, now all of a sudden you're talking about criminals that are out there being like, hey, maybe I need to move my money on out. Maybe I need to go ahead and move into something else. Maybe I'm not going to be able to launder money as easily as I did before. Maybe.
Well, I'm going to do something real quick before we get into the ES charts. I'm going to do something that we haven't done previously. I'm going to show a Bitcoin chart real quick, just for fun. So what we're looking at here is the chart of Bitcoin on the daily, and you can see below I have it kind of paired up with the ES chart here. And the reason I bring this up is because what you will notice is that for the most part, they are closely correlated, right? The moves they move, for the most part, they move together. Now, sometimes you get a scenario where one of them moves before the other, but they tend to kind of sync back up, right? So like I've got this horizontal line here. That was September 9th, 2021. And you can see that Bitcoin kind of started this move down before the ES did. But ES did catch up and follow along, right? And then you've got, I've got this line here back from, what was that? August 14th, 2022. You can kind of see that was one scenario where it's like the ES got this move down, but Bitcoin, it moved down, but I don't know that it necessarily participated, although it did. I mean, and that's the thing, right? It can make some big moves and fast. So I kind of zoom this out like this. It's like, okay, yep, there it is. ES moved, Bitcoin moved. That was a drop from 25,363 down to 15K. So really all I'm trying to show for those of you that don't follow this or pay attention to Bitcoin, crypto in general, Ethereum as well, that they are pretty closely correlated. And there are times that we see moves happen, in crypto before they happen, in the broader market, and vice versa. There are times that we see the moves, start to form or shape, in the S&P or the Qs before they materialize in crypto. I bring all this up because I put some fibs on here on Bitcoin from the most recent move up back in, March 10th, from about that 19,680 level to the highs up here just under 31,000. Bitcoin is sitting right at the midpoint. This 25,281, that is the midpoint of this most recent move up. And you have the 618 is down at 23,995.63. So, if buyers are going to step in, it would be right in this zone for a multitude of reasons, right? This is previous resistance right here as well. So you kind of want to see this area in here act as support. So if this, what's going on is not, if this is another scenario where it's not as big of a deal, and it kind of, okay, they end up working it and they come to the table, they work it out. You would expect that this zone in here would act as support, and that this is where they would come in and support it. Because if it breaks below that 618, then you're looking at that 786, which is 22,027. Below that, it likely will take out that 19,573 if it gets below that.
Which, and I think what we discovered it's a difficult sell once you get below that 20,000 mark. Like that capitulation down into that 15, that was pretty quick and dirty. It's like, it's very difficult to get that sell down and under. That 23 number was a number I've had circled for, it seems like 6 months, as far as being, okay, it'll eventually waddle down to 22, 23. But yeah, I like it. I think the only time that was really interesting on it when we had the quote unquote banking crisis, and put this in quotation marks, or banking, nightmare, whatever we want to call it, it surged hard when parts of the market were dipping. That's when it was making its highs, was when we had bank failures.
Yep. Yeah. I mean, and obviously the speculation, the more talk there is about, the possibility of when there was talk, like the possibility of a default, devaluation of the US dollar, blah, 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 blah. Your money's not safe in banks. That's going to make, crypto pops on that kind of stuff. But ultimately, they end up coming back together.
Yeah.
Right. They may decouple for a short period of time, but they end up coming back together.
Absolutely.
Anyway, I will let you continue with your.
I'm glad you posted it. It's like, look, we're very, very data light all through. It's like some of the biggest conversation as far as, this supposed liquidity crunch that is just around the corner. As far as treasuries and how that's going to end up shaking out, as far as, just a pull and suck in liquidity, and then what are the markets going to do? With that, it's like there's different data pointing in different directions, but it's like, so far, at least within the flow, I can't see. I can see cooling off of bull lines, but I can't see Armageddon on deck. So it's just tough stuff. I think ultimately in environments like this, especially with Fed next week, it's like eye on the chart, understanding that there's potential for risk off going into it, that kind of stuff. It's like that's the only way to really look at it, is really being peeled to the charts and trying to pair flow as much as you possibly can. Because this noise, man, I'll be honest with you, it's like being able to trade macro 5, 6, 7, 8, 10, 20 years ago was child's play compared to what it is now. Absolute child's play. It's like now,
especially
it's
how fast the news comes out, right? Like,
and how conflicting it can be.
Well, because think about the effort required to disseminate the news 20 years ago versus it's like now there's really no effort required. You just throw something out. Oh, and if it's not right, we can just say, oh, sorry, it was a mistake. Like, oh, sorry, we fucked that up. Like, it's not like they spent, the time and effort required to go print and, disseminate and people sat down, opened the paper with their coffee. It's so much faster. And which in some ways is good, but when it comes to misinformation and the ability to just spread bullshit very quickly and then, retract
spread enough of something, just enough of something to bolster your narrative to get a move and a push. And the way the markets trade now, you only need about 3 minutes to go ahead and quintuple a position. The way that you can, it's really, really wild, man. Genuinely, it is. And looking at it, but it's a very difficult thing. It's like, that's why we have to go back to these charts. We have to go back to the flow and respect those. And if narrative comes into play in some capacity, then fine. But I think a lot of people are going to struggle with being like, hey, why are we up here banging at these levels when, the overall landscape doesn't look all that super. And then you can turn around and be like, well, America's in the best shape of really any country out there. Why are the American markets lagging global markets by so much?
Yeah.
You know what I mean? So then it's like, you're really just grasping at that point. So let's get into these charts, man. Break it down for us.
Yeah. So real quick, Richie, I agree with you that that's a great point, is that rather than, some of the news that comes out, the headlines that come out, you're right that I think a lot of it, is clickbait. And, now that there's so many sites out there that get paid by advertisers to bring in traffic, it's just another motivator to put out bullshit. Right. So anyway, and Total asked, do you think any level of strength in crypto is a link to risk on for equities or not correlated? Like I said,
the old days,
from now,
yes.
What's that?
Well, I was going to say in the old days, yes. In the old days, it
Yeah,
was the ultimate risk on mechanism. So if you saw Mara flow banging, you saw Mr. Flow banging, you saw all of those things banging, that means
it was risk on. Let's go.
that was straight up risk on. Now it's like, at least with the banking scenario, it was a hedge, and that hedge has been pulled back when the Fed put in the put, as far as saying you need money, 1-800 pal, you got your cash. It's like
Now,
it's so that
total,
was
what I
in.
will say is that I've been watching crypto on the weekends, when the futures markets are closed, and there are times that you see crazy strength in crypto, on Sunday before the futures market opens, and you might get a little correction, but uh, that can signal, a strong day or a week ahead, but obviously crypto does crazy things on the weekends because it's the only thing to trade, right? So, outside of that, uh, again, the two are really closely correlated. So, you know, unless they become, I don't know that you're going to get a big enough, strong enough move in crypto without equities playing along. That's gonna give you any indication as to any sort of longer term move in equities, if that makes sense. Anyway, okay, so yeah, let's look at the ES chart here. Do you hear that background music? Sorry.
No.
Okay, good. Okay. Okay, so this is a 15-minute chart, and I have the London session, which took out the Asia session highs and lows. So I have the London session levels marked here. 42.73.75 is the low, and 42.85 being the high. This shaded box down here, we had marked off yesterday as, that 15-minute fair value gap. And you can see that so far, all we've done is come back in and fill that, right? If we are to break below that, say below 42.73, and not very quickly reclaim it, then I would expect that we will probably come down to these, 42.50 ish and test that, as long as it's not one of those quick dip and back up. Probably a speed bump there at 42.68.25, but ultimately below this level, I think we come down and test that 42.50, and if we can't hold that, then I think we're looking at 42.35, and then 42.20s. This area, this 42.20, if we do come down and test that, obviously that's, let's see, what, 58 down from here. If we do come down and test that 42.20 area, if we can't hold that, you can see here on the 15-minute, this move up right here, there's not a lot in there as far as structure goes, because it was pretty much straight up in there. So below 42.20, we probably get that 4200 test, and then you've got this shaded box down here at 41.70 or down to 41.73. Looking at this, if we see that kind of move below 42.20, I don't necessarily expect that, 4,200 would be that, psychological round number level. But we have trendline support down here as that I would not be surprised, to see that get tested, if we were to make that kind of move. So that's down around 41.60. So about 100 points or so down from here. That's just sort of, again, bigger picture, the bigger picture look, right? As far as what we have above, you can see this trend line right here. That was the top of that megaphone pattern, right? So we broke above it, kind of used it as support, broke below it, used it as resistance, back above as support, back below. That is that megaphone resistance. If I kind of drag this out, that would come in just under 4,300, 4,290-ish as we look forward in the week or out to next week. In the near term and kind of setting up the day here, it's really all about, you know, those pre-market lows, 42.73.75, and a move over 42.81 might take us up over, you know, that London high 42.85. If it can get above that and hold, then I think we've got a chance to get above that, go test that trend line, and then ultimately into that. I'm keeping the first fair value gap of the week on my chart. As we've seen in the past weeks, we go back and revisit it. And as I talked about yesterday, you know, I want to see if this scenario plays out, but I was looking for, you know, flattish yesterday. I'd like to see, you know, if we get if it's going to be, if we're going to end the week higher, then we would expect more often than not, we see the lows on Tuesday. We get that Tuesday low and then start the rally late Wednesday to finish Thursday and Friday strong. Don't know that that's what's going to happen, but that's kind of the scenario that I had in my head. But, you know, like anything else, I got to be ready to pivot. And if we get above this 42.85 and hold, you know, then I got to be looking for the possibility that, okay, that scenario is not going to play out. If we get the highs today, if we rally today, then, you know, that kind of switches where my head is at to, okay, if we're going to rally on Tuesday, then a lot of times Tuesday marks the high of the week. So those are kind of the you know, laying out the two scenarios that I think are possible. I think that's about it. You can see that first weekly fair value gap, you know, above that, again, these are 15-minute candles. So above that, you can see all the way up to 43.01 that we left behind on that move down yesterday. That's about it.
So do you have feels on any of this, Bender?
I mean, look, I told you what I kind of was thinking.
What your plan was, yeah.
Yesterday, and at least for now, that's still kind of my lean. But I'm, you know, at the same time, I'm looking for signs that is not going to be the scenario. And I have to be ready for that. But, you know, right now, the lean is that we end up lower today, and we put in the low of the week today. But yeah, I mean, that just comes from those market profiles, the weekly market profiles, right? So, you know, I just coming into Tuesday, I'm watching Tuesday because a lot of times Tuesday marks that, kind of gives you that indication of what the rest of the week could look like. So, I really like trading kind of late in the day, Wednesday and Thursday, and then early Friday, when we can find those sort of scenarios that all line up. And it's like, okay, we were looking, you know, we saw Monday high, Tuesday low, or Monday low, Tuesday high. That can kind of set up the rest of the week.
Yeah, we're putting together a nice little rally coming into open here.
I mean, we're what, 6-7 handles off the lows.
Mm-hmm.
We'll see if we get anything meaningful. But after taking out those levels that we did up above late last week and then early yesterday, there's some stuff that's left behind that I don't think would be an unhealthy move, but I would like to see a pullback to buy. Late. I'd like to see that. I'd like to see us close near the lows today.
All right, very good. So, yeah, but one thing I forgot to mention, you did see Elon in his statement to GM, right? They came out
About
and
the
said
go ahead.
that they would be happy. GM stepped out and said, "Hey, we're way behind, blah blah blah, all that kind of stuff, as far as their batteries." And Elon stepped out and said, "Hey, we'd be more than happy to license our technology to you."
Yeah, I did see that.
Kind of funny.
Good stuff. Yep.
All right. So we got Stonk.
Hello. Good
Tell
morning.
us how the world turns, buddy. What you got over there?
Well, here's a world record that I found yesterday. Most trees planted by an individual in 24 hours a day, right? Yeah. One day, this guy, hippie, planting trees. Any guesses? Any takers? How many trees could you plant in a day?
Depends how big they are.
With equipment or like bare hands?
He had this little shovel-looking thing, and he just did one little doop in the ground, drop.
Oh man,
The number's got to be well over 1,000.
Oh yeah,
1,000?
Yeah, well over
That
1,000.
seems like a lot.
Yeah, but don't think of it. Think of it as like a little sapling, like a little tiny tree that's maybe 6 inches tall.
he's not like he was.
Okay,
just
what state was in this? That has a big, because in Texas you can't even get into the ground. So.
Well, I don't want to trigger hells and sound racist, but he was from Canada.
Why would that?
I don't even know what kind of soil they have up there.
I don't even know what to say. I don't know how to.
Well, last week it was racist when I said Canada. Fish Butcher getting closer. 23,000. So there you go.
23,000?
In a day. All right.
Man, I feel like a lazy piece of shit.
Gotta go plant some trees. Yeah, you're almost there sooner. Only add a lot to it. All right. I know yesterday Hells was all boned up for smash burgers. So here we got a smash burger potentially on the table. Only on the queues. The spy did not. Actually, you know what? This wouldn't even count. So disregard. We would have had to close above the high. So we didn't do that. I was setting alert for yesterday's low, which I guess would be a good thing to be aware of. But yeah, we would have had to close above there. So disregard. Let's move into some of this other shit. Let's see. We will start with we got the alert set on Swan's list. So that was his. We'll get those pop in the room. Let's check out the Russell. All right. So the Russell, we rejected this top of this megaphone. We did rebalance, whatever you want to say, on this daily fair value gap. Here's our new week opening gap. That's this little pink box, that pink area there. Let's see. So you can clearly see this is a fair value gap on the 4 hour that was left behind on the way down. Here is our hourly order. Actually, no, I'm sorry. That's this daily. This is the same thing we looked at yesterday. The midpoint of the wick of this candle is this red line there on the chart. We could see the reaction. Pretty important line either way. And then this yellow box below would be our downside targets with this daily fair value gap. That is still open. Let's see. We've got switch over to this 1 hour. We can see the reactions to this line here. So we'll be looking, if we start to fill in this daily fair value gap, we'll be looking for the reaction to this line down here, 1783.90. So that's what I'll be watching here on the Russell. And thank you, Freeman, for sharing what we got in there yesterday. That was helpful. Good thing to be aware of. And yes, Hells, that was a bunch of shitty stocks in there. So good tip. Let's see. So we've got the NASDAQ sitting here inside this new week opening gap, this pink box. Kind of could maybe see we just made the right shoulder of a Head and Shoulders, left shoulder, head, maybe that right there. So we'll keep an eye on that. And then we can see this is order block line that'll be watching. That's based on this, the wick of this candle, the midpoint of it. And then so if we pulled back, we could see we chopped around and bounced off this line yesterday. So we'll be watching the reaction there. Below that, next line I'll be looking for would be that 480.75. And then the gold boxes would be our daily fair value gaps. And then you can clearly see this one left open. I guess we would just, this would be basically the bottom of this the top of this 4-hour fair value gap with room all the way down to here. That 336.50 on the NASDAQ. Other things I'll be watching today is going to be Apple. I'm going to keep an eye on Apple today, as usual. So, actually, I think I might have it looking better over here.
It's waddled above your call trigger line, or either that is right at it.
Yep, it's sitting on it. That's a big dark pool there. This is the line that Hells is referring to, 180.09. I have a very conservative put trigger because, again, as I've mentioned in the past, mainly watching Apple because I want to trade an NQ, and it's obviously an important one. So if we're going to push up, we got to hold above this 180.09. Then I'll be looking at 180.95, which was 6.6% from June 2nd. We did also have Apple on the dark pool list from last night, which I posted above. I forget off the top of my head where they hit it. Here we go. 179.58. So we're above it, and it's like basically a tack on, it's what, 50 cents away from this one. So that's what we'll be watching on Apple. It does look like we've fallen back into the risingest wedge of all time. And there you can see these fibs that I was throwing out yesterday where I was looking for that 189.80. So that's kind of what I've got there on Apple. And then the other one will be NVIDIA. We still got this battle between the Head and Shoulders and the bull flag. Here's an aggressive put trigger for today that would probably be just a scalp, and then you'd be looking for the reaction to this bigger dark pool below 378.34, which the break of that would also confirm the Head and Shoulders. If we were going to go up, I'll be watching this dark pool up here at 397.70, and that's all I got for today.
All right, very good. All right, that basically puts us where we are. Really not a lot of move off of last night into today, maybe a little dip, maybe a little pop. But relatively speaking, we're opening right about where we closed. Flow, again, is going to be important. I would pay special attention to Apple, Microsoft Flow. We know Google Flow has been pretty hot the past few days, so look for that to continue. Amazon Flow has been interesting, but there are a lot of near-term upside plays being pumped through there. I think Apple's very, very important today from a flow standpoint. Do they buy what they sold off yesterday, or are they looking for a lower low? And that's going to be the question that I think is going to drive the market overall. So Apple is a top priority as far as watching, and we'll go from there. You guys have anything else you want to offer?
Nope, I'm good.
I missed the Coinbase news as well. The SEC saying they made billions of dollars illegally acting as a unregistered broker for 5 years or 4 years or something like that. So Coin taking it in the face here.
Yeah, no, it's like that was a pretty dramatic candle down. We were kind of chatting through that. It's like, it's weird, Bender, because it's like regulation, but what's a regulation in order for them to even comply with?
Right.
It's like I think we're asking questions that I don't think any of us, at least myself, I'm not suited to answer it. But that it's like, if you're saying we need regulation, but there's no regulation in place, it's like, whose fault is that?
Yeah, well, it sounds like is this a scenario where they're like applying, they're taking regulations that are worded vaguely enough to say, well, you should have been following these rules, even though they
Right.
weren't written for you. You should be following these rules.
Right. Or did they actually
I don't know.
apply
I have no
and try
idea.
to do that? And they're like, no, this doesn't apply to you. And then now we're going to recreate the standard for you. It's like the whole thing. Look, it's like I think we touched on everything that we touched on. The government wants its piece. Until they get their piece, they're going to wreak havoc on anything and anyone, no matter what you do. You got to eliminate stand, got to pay the city tax, got to pay the local tax, county tax, whatever tax. You might even have to have like some type of food person come out and make sure that you're properly, storing your lemons in order to actually serve to people. Doesn't matter what you do. They want their piece. They go and get it too. So anyways, we have 3 minutes until
All right.
open. Let's go ahead and have a good day.
All right. See you in a few.